Hello, everyone. Welcome back to CFS Summit 2022, Render the Digital Reality. My name is Enrique Menendez, Editor-in-Chief at CFS and your host for this year's summit. Today is Day 0 opening, a foundation for Web3 fashion, science, and culture. We're pleased to have all of you with us in virtual reality at the Grand Palais Ephemer in the Spin Metaverse. Our topic for today's panel is Measure the Metaverse's Value. Our moderator is Dominic-Madori, senior reporter at TechCrunch. And for our speakers, we have Blake Lezenski, program manager at Outlier Ventures, Guenther Dobrauz, partner at Exelixis, Jimmy Kim, co-founder and general partner at Sparklabs, Ken Timsit, head of Cronos lab at Cronos. The metaverse and Web3 remains a relatively new space, and as such, we are still learning, adapting, and growing. Of course, a fundamental tool to growth is capital, but we also need to learn how to measure and identify where to invest all of our resources or some of our resources, whether that is money or it's time and energy. Web3 itself is driven by a way of thinking that has rewritten how we prescribe value, showing that there is power in new ways of operating like decentralization. So alongside that energy and that way of thinking, and as we assess innovators and new projects on the rise, we want to further and deepen understanding of how ways and to measure value. For our conversation today, we'll be passing it over to Dominic.
Thank you so much, Enrique, for that introduction. I guess just to jump right into things, the first question is, why do you all invest in Web3 and metaverse startups? What really drives your investments in this space? And if it's just to make money, that's okay. Blake, do you want to go first?
Sure. Great question, Dominic. And money is great, but I think my primary driver that brought me into Web3 is the curiosity of what is behind the corner of the forefront of the technology that I consider Web3 to be, and working to create and define standards for the emerging next paradigm of socioeconomic activity is not only personally rewarding, but attracts the highest caliber of people in the space who are also amazingly kind and open-minded. So getting to work with those people, that's something that gets you out of bed in the morning.
It's kind of the same. And first of all, thank you for the invitation. And thank you for your explanation, Blake, which I can only agree with. I think for me, it's being a bit older, it's reminding me of when the internet started, right? And within very few years, you saw everybody being dragged into it, as some said. And I think the unfolding of Web3 will kind of have a similar effect. And so obviously we want to be part of that.
Hi, so my name is Jimmy Kim. I'm one of the co-founders and general partners of Sparklabs. We are a group of accelerators and VC funds. We have presences in Taiwan, Australia, Korea. Korea is our headquarters. And we also have some funds that we co-invest or do follow-on investment to our accelerator companies and everything right now. So that's what we do. So my background is from gaming. You know, I used to work at Nexon, which is a gaming company listed at the Tokyo Stock Exchange and everything right now. So metaverse to me, I think I'm a lot more familiar than the metaverse concept. You know, when Roblox and all these things came out, Minecraft came out. I mean, we really thought it as a place where people could hang out and meet and do everything that can do in the real world. But of course, it was in a gaming environment. So it was very funny when I heard about the metaverse. I really thought that, well, we've been having the metaverse. It's called the gaming universe and everything right now. But of course, there's a lot more real world connections compared to like a more fantasy world right now. I think that's why I think the metaverse is something that's very interesting. And now I think it's not just being a gaming world, but also somewhere where really truly where people not just go to get entertainment, but also to really live out their lives. I think the metaverse is very interesting. And the third thing is Web3. I think, with this new blockchain technology and everything right now, and one of my friends told me that in a deep fake world, blockchain is a truth. I do think that, we really believe that Web3, although there's not a clear killer app that demonstrates a blockchain technology, cryptocurrencies and everything. There are a lot of projects there right now, but I do believe that this is an underlying technology, and also could be a platform that really changes the kind of the ownership and perspective of owning data and how owns data compared to Web 2 and everything right now. So of course, then we believe when there is a new avenue of going forward, we believe that there is an opportunity also financially as a venture investor. That's why we very look closely to the metaverse and Web3.
Yeah, and so speaking for myself, so I've been now participating in Web3 and DeFi for a few years now, and initially we were really targeting early adopters, tech-savvy users who were able to understand what it meant to control their assets and use blockchain as a technology to store and transfer value. We're now reaching a point where, and we're going to talk about it during this discussion, right? We're reaching a point where Web3 and crypto are reaching the mainstream. And as a blockchain network, our responsibility is to make sure that we are supporting an ecosystem of applications that make it useful for mainstream users to experiment with Web3. And so really the reason why we're investing in crypto startups and in Web3 startups is to make sure that there are enough useful things for users to do, so that it's not just an experiment, but something that provides real utility in their day-to-day lives.
And how do you all measure the metaverse and Web3's value? What benchmark do you all like to use?
Yeah, so I mean, there are several levels at which you can measure the economic value created by Web3. So at a very macro level, again, it's a technology to store and transfer value without intermediaries. And so that means that it's a technology that aims to remove a number of inefficiencies when it comes to the ability to trade, invest, and do commerce across borders. It's a technology that enables peer-to-peer finance, basically. And so, its economic contribution to the world can be measured by the cost savings that it generates when it comes to enabling peer-to-peer commerce and trading. At a more individual level, I think that if I'm a user of Web3, what this technology enables me to do is to trade across borders. So if I have NFTs or collectibles, right, I have instant access to global liquidity, to a global market of users who might be interested in buying what I'm selling. If I have a cryptocurrency, I have instant access to a global market of traders and liquidity pools. And so that means that I'm always going to be able to sell what I have or buy it for a better price than what could be achieved if I were limited to my local network and my own financial institution. So that's the second level of value. And then, of course, when we look at the products that we create, we measure their value, the value that they're creating at the product level by the amount of user adoption that they're generating. So we're looking at daily transactions, number of monthly active users, and total value locked as the key top metrics that measure a product success in Web3. Well,
I think the key thing of a metaverse or any like game is how many people are registered. And if you take a step forward, how many people, go in, are there every day, or how many people are there simultaneously? These are all gaming metrics, right now, of unique user to duration to DAU, MAU, WAU. I think for a metaverse, those are things that you must. There has to be users for universe to happen right now. So I think that is the first kind of things metrics wise that we really look into, and that's also seen with Web3 also. I mean, you can have great technology, but if nobody's using it, it's not, it's not relevant. So the key thing when we value a company, of course, before revenue, because it's very hard to monetize, right now. But just like in the early web days or early 2020s right now, a good sign that something can be monetizable is the user size and user kind of the metrics of how often, how long, how many people are there simultaneously. These are the metrics I think we look very closely at.
I would say it's very difficult to even start to think about how you would measure or quantify the metaverse because it doesn't exist yet, right? There is many attempts right now, and we are following as many as we can in that space. But it's like trying in '99 to, again, as I said it before, measure the internet and what it would do. I think we're really only starting, and the effect will be huge. So I would say we are really also, just like Ken just explained, mostly looking at the standalone value of what people are doing in their companies. And then obviously we have some ideas and we have some dreams, but we're not really applying them. So we're kind of looking on the micro level, really.
I'm definitely team Guenther on this one. I think, especially from the perspective of evaluating a startup's value, at an early stage, it's not something you can rigorously measure, but you can look for quality within specific drivers of value that can be predictors of future success, such as adaptability of their tech, current traction, future market size, the team and their domain expertise. Sometimes a team working on a very interesting opportunity might not have the experience or the network to execute the value capture, might not be the team for the job, even though probably a great team for something else.
And but how do you assess Web3's value in relation to fashion?
Well, it's a bit different than traditional technology, but many rules still hold true. I would say all of those value drivers still apply. But on top of that, you also have to pay attention to the specific fashion network of that project and their ability to get high-profile clients. It's about the strength of their own brand equity, and brand IP is extremely important in the fashion space. It's actually their ability to influence culture and the cultural narrative. Some of more tangible metrics would include the visibility metrics. That's how you can measure, the footprint on the culture. And finally, it's about their scalability and how they overcome the tech limitations of the space.
And I would also like to note that in the fashion space, that's one of the most classical kind of linear businesses we're dealing with. And the majority of things produced and offered today, they're really part of this fast fashion industry. And I think this is something we need to change, right? And the digital advancement, and especially the new generations coming to the table, they offer us the chance. And especially if you look at things that Lablaco and associated companies are doing, that's where we are seeing a lot of those opportunities, just as an example, right? And it's just fascinating also when I look at the conference and so forth, and you look at the key players and how they're changing stuff, it's just amazing. And also then when you look into haute couture and other players who are kind of trying to adopt to it, I think that's a really interesting thing of the future.
Yeah, maybe to complement what was just said with some numbers. I think when I speak with fashion brands and creators, one of the aspects that is really enticing to them with respect to Web3 is the community aspect. So it is the fact that even though we're all sitting behind our computers, we managed to use Web3 tokens and NFTs and or digital collectibles as rallying points for digital communities. And this can be seen in a few ways. So I think when you look at Farfetch, Nike, Remova, when they started NFT projects, they observed much higher user engagement between their brands and their core fans that were at a level that was really attractive. Even for us, when we look at Cronos, when we launched, I think that every user of the chain, of which there are 1 million today, was interacting with the chain every 2 days. And even today, if 20% of monthly active users are using the chain every day. So there's a very strong connection that brands are able to forge with their users, which is another way that Web3 contributes to fashion brands.
And to kind of take a step back and look at everything, there's a lot of uncertainty in the market, and crypto is facing a winter. Everything's kind of, there's a lot of hesitancy. To just get to it, is Web3 a stable investment, and what does stability really look like in this space?
I do think with FTX and everything that's happening right now in the Web3 space right now, where contagions through the FTX make it very can make people hesitant in the Web3 space. But like I said, we believe that Web3, blockchain, the metaverse are, it's not a matter of if they're going to come, it's a matter of when they're going to come right now. But like in any space, when there's still formation, in the new area space, there will be so-called, should I say, these kind of big crashes or incidences right now. But still, if you look at the graph, that I think you'll still look upwards, right now. So I do think that, but I think that the Web3 or Bitcoin area, when people were minting millionaires by the day, and billionaires popping up right now, I think that definitely brought some wrong expectations on how to, you can't be a billionaire usually by just half a year. I mean, it's very rare. But in the Bitcoin cases, there's so many that are popping up. So I think a lot of people had, we're getting to get rich kind of scheme right now. And when there's so much kind of activity, you're also going to attract kind of like not so-called above the belt players. But I do think that the shakeups and everything right now will make investors and players a little more so-called discerning, right now. So we still believe that Web3 and the metaverse and blockchain are going to be the trend. And, I do, but it will take time because, people will still need to recover, digest and everything right now. But we believe that, and any investment and venture investment by anything is very risky. So I don't think that anybody should put all their eggs in venture investing. But I do think if your portfolio and everything right now, if you have a good portfolio and if you have a good interest and there's an exposure they can do, I definitely think Web3, blockchain, metaverse should be on your radar.
I think it's the fourth or fifth crypto winter I'm living through, so that doesn't really bother me too much. But obviously, you're touching on a very really important point, and that is if you take a step back and if you look into innovation, usually it's developing in the shape of an S curve. And the important part is the emergence of a dominant design. And that dominant design we don't have yet in that space. And hence a lot of people are struggling. And there's so many points which you mentioned that need to come in line to create that, that are creating what you would call this nervousness. And then obviously you have all the other things that are happening in the world right now, which aren't happening, which aren't helping. But be it as it may be, I think the important thing is not to focus on everything that is stopping us, but really focus on the amazing things that are happening, right? And that's what we are doing. So yes, we are aware that there's a war. We are aware of all the problems in crypto and so forth. But really what we try to do is focus on the real opportunities out there.
I think the recent events in crypto, of course, put the market in a certain downturn. But there are many other classes that are also, I would say, in a down market right now. Investment in Web3 remains stable in a sense that there is still a large pool of capital consistently being deployed into the space, but the conditions of that deployment got more competitive. In many ways, it should not stop or deter people from entering the space. It's cheaper to enter and build. But it's the best builders that will secure the capital with the attention to strong business fundamentals, not speculants, as sometimes it can happen in a bull market. Investors will also take much longer time to run deeper due diligence, but getting to building now will leave you in the best position to capitalize on the future market cycles.
Yes, so I think also when you ask the question about investments in Web3, I think it's important to specify from which perspective. Right? I think it is a surprise to no one that cryptocurrency investments by retail traders are highly volatile and do not represent by themselves anything like a stable investment in any by any measure. However, again, I think when you look at the progress that the technology is doing, and for example, the way that decentralized finance protocols and NFT platforms have been able to perform and not break despite huge upheavals in the marketplace. This has shown, in my view, the robustness of decentralized protocols and their ability to overcome huge market swings. And in that sense, it has proven that all the investments that we've made in the technology are starting to bear fruit.
I think we should note that it was not only retail investors, where I absolutely agree. It was also some of the most professional investors out there, right? Who have just written off 3-digit million numbers in the latest downfall of exchange setups and so forth. So I think we all have to be aware that until dominant designs emerge, there will be those situations, and that's all good and fine, right? I think we just have to be extra careful.
And to kind of pivot the topic a little bit, talking about the range of value, I would love for you all to kind of talk about some of the investments that you have in your portfolio and the impact that they're currently having in, your respective industries of fashion, art, culture, design. Blake, would you like to go first?
All right, of course. So Outlier is working with a lot of amazing startups in the fashion space, and the whole cohort in the program was kind of brought together because each demonstrates technical capacity combined with the ability to expand the leverage and network in industries like luxury, fashion, and commerce. And the cohort rallied together because of exceptional passion for defining the future of the luxury industry in the years to come. To give some specific examples, I think, for example, a team called Alter, which is looking to utilize the value lying dormant in assets that is archival IP of luxury brands and cultural heritage institutions, and do it to build a bridge that connects the brand IP to the future of Web3. I think they can really turn the tides of fashion as an industry. SkinUps would be another great example, introducing very high-level luxury designer IP into gaming, exclusive partner of Dolce & Gabbana for in-game skins. And Kiri, approaching it from a much more technical standpoint, but creating 3D at scale from 2D images, acting as a registry of digital twins and automating the production of those digital twins at scale.
And it's definitely one of our portfolio companies right now. Like I said, a lot of people said that in a deep fake world, blockchain is the truth. I do think that it really uses, blockchain, this immutable ledger, can really give so-called people comfort or people proof of where this product was right now. So I do think that circular fashion is a place where blockchain can be implemented very well and very quickly. We also have a company called Mint NFT. And a lot of people want to link their physical and metaverse kind of items, digital assets together. But, still the crypto space is very, very fragmented right now. And this company did a collaboration, or is their NFT partner with Bauman and also with Barbie. And the key thing is that they made it easy for the Web2 based kind of marketing campaigns to easily transition to Web3. That you don't have to decide on a chain. You don't have to decide on a wallet. You don't have to ask your users to sign up right now and onboard. So so those are the two companies in our portfolio that we're very proud of in our investment right now. And then we've invested early in Messari, which is right now, and we also were very fortunate to have one of our companies get bought out by Animoca right now. But so we like to definitely. We believe in the space, but we also believe that research, platform, not necessarily layer one, but I call it layer one foundation companies right now that you need a research right now. And then we also are looking into sort of companies like Spin and also Mint to provide real applications for companies, and which makes it easier for people to transition, B2B tools to transition into the metaverse.
Now, Exelixis obviously has a quite broad range of things we're looking at, but from the things you're asking, obviously number one is Lablaco, which I don't need to explain, I guess, here, but where we think that there's a lot of great thinking going on right now. So I leave that on the side, but the one I would mention is OceanSafe, which is a Swiss company we invested in, and they are really doing cradle-to-cradle certified garment products mostly. which they on the one hand are bringing into main use, because all of the stuff we're wearing today, with the exception of my undershirt, is not sustainable yet, and it's usually not circular, right? We recycle it, we share it, but usually at some point we have to throw it away. So I think that's really good stuff that is happening there, and they're quite well advanced in what they're doing there. We also originally invested in Near Foundation in Switzerland, which we believe at the time was a great setup with some good things. But obviously, with all of those protocols, we have to see where they're eventually going.
Yeah, and so as for me, so Cronos is a blockchain network. It's a blockchain protocol, and as a result, both in terms of developing Cronos and through our accelerators and incubators, the investments that we make, they tend to be probably more foundational, right? More at the in terms of building the rails than those investments that the other speakers have talked about. I think our main investment thesis and strategic priority is that we believe that in order to bring mainstream users to Web3, we need two things. We need custodial experiences, so centralized actors that need to be regulated and have strong, trusted brands in the jurisdictions where they are operating. And we also need decentralized protocols where code is what you trust and whose security does not require to trust anyone. And so to some extent, a lot of the developments that we're doing on Cronos aim to marry and leverage those two sides of the coin. Recently, we incubated a NFT platform called Minted. And the way that, so it's a multi-chain NFT platform where people can buy and sell NFTs, right? So there are plenty of those, but I guess the way that Minted aims to differentiate itself is by partnering on one hand with the DeFi protocols and NFT collections that are decentralized and are on Cronos, and partnering on the other hand as well with regulated actors like Crypto.com and Transact, who manage the on-ramp and off-ramp for mainstream users and enable them to buy digital collectibles without, with very, very manageable learning curve. And so on one hand, you have collections that are really targeted at what we call the degens, right? So very engaged NFT traders. And on the other hand, soon we're going to launch, Minted is going to launch an NFT collection with Snoop Dogg, which is typically completely at the other end of the spectrum, the kind of collection that brings new users to a chain and an ecosystem.
Yeah, and that kind of went into the next thing I was going to ask you. So I guess kind of you spoke about Minted. Blake, can you tell us a little bit more about what Outlier is doing and kind of the incubators and the startups that they're really looking at or that are like positioned to also have an impact?
Yes, so Farfetch Dream Assembly Basecamp program is a collaboration effort between Farfetch and Outlier Ventures to put forward first of its kind program fully dedicated to defining the future of Web3 luxury fashion space, looking for a cohort of up to 10 builders that we support through access to combined networks of both Farfetch and Outlier Ventures, making the right introductions in the space to increase the visibility of those projects and boost their brand equity, as well as hands-on assistance by working with those projects on each aspect of what it means to be a Web3 startup, from token design, token governance, tokenomics, DAO setup, NFT strategy, community. The only thing we cannot do for them is to build the technology for them. We're not a software development studio. And we support them at every step of their journey with the combined networks of Farfetch and Outlier Ventures, trying to put them at the forefront of the bridge between Web 2 and Web 3 for luxury brands in the wider commerce space as well as lifestyle space.
Yeah, that's quite interesting. Just a follow-up to that, what are some common problems that you've seen in terms of companies trying to jump from Web 2 to Web 3?
So talking specifically about the fashion sector, some challenges are related to adoption, but some of them are technical. And I believe teams and also companies considering that jump should pay very careful attention on how they go about the scalability of 3D production, as well as scalability of digital design. And then the trade-off between quality, right? In fashion and luxury, you need the highest levels of quality, which will always be kind of a trade-off with the scalability. They should pay particular attention to keeping a reliable and verifiable connection between physical and digital assets. And finally, about asset interoperability across metaverses and virtual spaces, how those assets can be used, what makes a fashion wearable an actual wearable.
And
maybe I can comment on that question as well, because of course that's a recurring conversation with brands, and particularly now with Web2 brands and corporates who are making inroads into Web3. I think one of the most frequent mistakes that brands make is that they're starting from the viewpoint of, hey, we have those tens of millions of customers, and we're going to create NFTs or metaverse experiences for them. And oftentimes that doesn't really work, because the majority of those users, of course, have not yet adopted crypto and would take enormous education efforts to get there. And so I think to some extent we're repeating what we saw when the internet and e-commerce started, right? When the internet started, and particularly e-commerce, it wasn't so much about retail companies forcing online purchases down the throat of their customers. It was much more about them adapting to a new customer segment who was already tech savvy and digitally native, and finding ways to win market share within that community. And so, to make a long story short, I found that the Web2 brands who are most successful in Web3 are the ones who are able to think about what are the core elements of their brand's value proposition and their products, and use that to win market share among the existing community of crypto users that they need, therefore, to understand and really talk to in their language, as opposed to trying to create a metaverse experience light for customers who are not yet familiar with the tools and approaches of our industry.
Oops, I agree with that. I would just say that we've seen it with some projects recently, that especially the crypto user group, which you refer to, is like it or not, but very special. And it's not the classical user group of fashion brands. So yes, on the one hand, you're getting first kind of knowledge on it, but eventually we still believe that the majority of people who really are deeply in fashion, they will be thinking differently, right? So you also need to, yes, on the one hand, do as you just explained, but on the other hand, also reach out to them to make sure you really capture them. And at least that was one of the advice that we've been given.
And kind of to stay on you for a moment, investing in circular companies, you spoke about you touched on this briefly in terms of, talking about fast fashion and all of our clothes, but investing in the circular companies and that embrace the blockchain is really a focus of the Exelixis portfolio. Can you walk us through this direction and how it really plays out as an investment firm?
That's a tough one because in reality, you need to start with, what does circularity really mean, right? And obviously there's people who really understand it, but most people don't. So you need to spend at least 10 minutes to explain it. And then on the other hand, there's blockchain, right? Which comes from a totally different area. And to bring those two together, that's yet another one. But I think that's kind of where we're starting, not with all of the investments, I should note, but with many. And yes, in an ideal scenario, we have people who are really in the circular space. Most of them are indeed startups, but there's also branded houses now starting with that, and they're asking for questions. So the real challenge on this one is always how do you, coming from a really circular or at least a recycling world, how do you conceptualize circularity? Really, it's really easy if you think about it, because all you have to do is go backwards in history, and this is where we had circularity, right? It really started, and I'm simplifying, with the last industrial revolution, and everything since then has led to everything being produced further east and with more chemistry added. And I'm paraphrasing here, right? And you need to step away from that. It's just like in nature, every leaf that falls from a tree, every body of every human being or animal that goes to the other side is part of a circle. The only stuff that isn't is all of those things we have around here, which just turn into waste, and that waste is a human product, and we just need to step away from that. Now, the beautiful thing about blockchain, on the other hand, is that it kind of takes away the human part, and it puts the trust into the technology. So the idea is, and again, there will be many, many other applications, but the thing that we are seeing is that people can track who has done what, and that you really, in theory, you have the chance to every time see who has done what. So for example, there's those beautiful t-shirts, which you can't see here. I think this is done either by Kalida in Switzerland or by T-Mail. And they're really produced in a circular way, right? So you can throw them into your garden and see how they turn into soil again. And on the other hand, hopefully soon you will be able to check that on the blockchain. But that's just starting points. But that is kind of thinking ways that we implement into our decision-making process.
And kind of to open this up to everyone, what value does Web3 really, what value does it have in terms of fashion and circularity and making things more sustainable? And really, what is the benefit for the companies who really try to go after this and engage in it?
To be honest, there's very few companies who do that right now. So I think for those who do, it will be a huge challenge. But if you just look into the venture space, right, it's a very old-fashioned way, and I don't mean that in a bad way, because that's also where I'm coming from. So in the best way, it's a huge chance for new companies to do that. And now Web3 and so forth, for me, that's a gateway, right, which allows to transport new ideas and new models, or old models, if you want to call them that. So I think it's about three things really. On the one hand, make sure that people do really understand circularity, which is really easy, right? But still, they need to understand it because they usually haven't been educated. And then secondly, they need to understand all the new technologies, with blockchain just being one of them, of the exponential innovations out there. And thirdly, they need to understand all of the new opportunities that are coming through the Web3, right? So that's a lot, right? But if you bring it together in a good way, it's opening up really, really amazing opportunities.
I'd say that NFT-based or digital fashion, there is one level in which it drives more sustainability in a way that it may not physically exist. So it doesn't create the pollution through consumption, doesn't create pollution through prototype design, or pollution from the production costs. However, if you go even deeper, to me, circularity is also about using the value that's already there, trapped in some sort of way. So I'm even thinking about generating value for brands from secondary market sales of luxury assets, currently something that's totally closed off in terms of value capture to the brand, but for example, very natural for the NFT scene. Potentially maybe even using a luxury asset as some sort of a verifiable collateral in DeFi. How you achieve sustainability or strive towards better sustainability and circularity in the fashion space through the use of Web3 modules is a huge area of opportunity for startups to build on. Right,
and I think, like both of you suggested, we're not yet at a point where we could argue that like crypto is saving the planet. Far from it. At the core, it's a technology that is used to create new rails for the financial system. And in terms of the values that it conveys, those values are very much around peer-to-peer commerce and individual empowerment. And I think that to some extent, the way that smart contracts are enabling decentralized organizations to regulate themselves is a good foundation for how in the future we can give more power to global communities of citizens and help them to organize themselves in ways that will ultimately contribute to a more sustainable mode of consumption and more circularity. I think right now the use cases of those DAOs, as they are called, so decentralized organizations, are very financial in nature. The best functioning DAOs are DAOs that regulate decentralized finance protocols, that decide which assets should be accepted as collateral, which trading pools should be created, when the protocol should be upgraded. And I think the governance of the AVE protocol is a good example of vibrant and well-functioning community, for example. And I think those self-organizing communities ultimately will grow to the point where they're able to also tackle societal problems and pool their resources behind projects that matter to citizens. I think so. Right now, we're more building the tools for that to happen.
And kind of just to like specifically with this, what use can the blockchain play for startups in terms of circularity and being sustainable? Is there a use for it? Like, what is that?
Well, I have a very simple view of the blockchain, and I hope that Ken and Blake will not hit me over the head for that. But in reality, what it does, it takes the human out, right? It's you're facilitating transactions on the blockchain, and you don't need somebody to look into that. So you're kind of taking away a part of the business that created everything that, not everything, but a huge part of what the audit firms are doing, where you have somebody to look into that. So if I want to send money today to Blake or Ken, the question is, do I need a bank or do I simply use my phone here, right? Depending on whichever coin we may be using, I can do that without going through a bank in theory. So I think that's the starting point. If you look into the Bitcoin white paper and so, which kind of appeared at the end of the last financial crisis, and we don't know who wrote it, but I guess the authors or the author, we don't know, was just not happy with how it all worked. Now, blockchain itself is an infrastructure technology that can do so much more. So everybody's focusing on the payment stuff, on the crypto and so forth, but eventually we'll be seeing it in all kinds of industries, such as fashion, such as pharma, such as automobile, whatever, right? And it will kind of be doing the same thing. So if people can go on there and check themselves what somebody has been doing, rather than somebody going into that and auditing that. Now, I guess audit will still be used, but the audit will be, I guess, focusing on checking how all of the algorithms and so forth are done.
And so is it like taking the human out? Is that like more or less sustainable? Or is it more so that like the blockchain can really, I guess consumers can hold companies accountable in terms of like seeing like, oh, this isn't where you said it was from or something like that. How does that work?
I don't think it's the bad part is about taking humans out. You will need more people, but doing more stuff. It's like the internet, right? I mean, we wouldn't have been able to hold this communication a couple of years ago, right? It's the internet that enables it, but there's more people working on that. So I think it's just creating more opportunity and allowing us to speed everything up at the end of the day.
So I think that, you know, blockchain or crypto or Web3, however you want to call it, it's really, you know, I think like we just said, right? It's an infrastructure technology that makes new things and new businesses possible. And I think, you know, it's not going to be blockchain that introduces sustainability or circularity into fashion. It's more blockchain that enables startups or new brands that have a different types of values to be successful. So today, I think, you know, when you look at fashion, it's a very big industry, and of course, you know, to reach a global audience in that industry, you need to have a global supply chain. You need to have access to retail outlets all over the world, or, you know, massive marketing budgets. And so, you know, there are certainly economies of scale, and there are advantages that protect incumbent brands and incumbent infrastructures in order to keep doing things the way that they've always been, you know, they've been done in the last few decades. So I think if you want to invent new approaches to fashion, which means new ways, you know, what is fashion? Fashion is status, culture, and appearance, right? So if you want new companies to invent new ways that people can express their status, their culture, and their appearance, you also need ways that those brands and companies can touch global audiences, sort of working around the physical barriers and competitive advantages that existing groups have been able to put in place. And I think that's, you know, the ability to do that and to create business models around that is what is enabled by those new financial rates.
To even refer to what Ken said earlier, it's all about the value of transfer, right? And with Bitcoin, like Guenther said, It all started with Bitcoin as a sort of digital gold, just direct new paradigm of transferring value between individuals. But then with invention of Ethereum, essentially programmable money, we can talk about those new socioeconomic paradigms of how the value is transferred, how humans cooperate with one another, with emergence of such structures as DAO, which in some circles have the hope of replacing the paradigm of the company. These are really interesting opportunities, and will also cut out a lot of middlemen around more creative industries. So in fashion specifically, not only in the metaverse and Web3, fashion is what all those things that Ken mentioned, but it's also self-expression, an expression of identity. And often people expressing their identity in Web3 and metaverse can be someone very different than they are, let's say, in a more traditional environments, which also comes with different customer habits. Another implication, I actually like what you pointed out, Dominic, that it also is a reliable way to check the provenance of assets, check their origin, if they were manufactured the way they claim they were manufactured. And finally, it can end the problem of counterfeits with a reliable way to verify the origin of an asset in fashion.
I fully agree, and I think it's going into so many directions. I mean, if you just start to think about it, right? We're very prone to thinking about the old ways where we're coming from, but if you think about extending your identity into the digital space even more than if you do it today with the internet, there's just so many things you can do. So whatever you buy, you may also buy digitally and have on your avatar. If you get a tattoo, you know, you may also via NFT get it onto that or onto one of them or in the different metaverses and so forth. So again, I have no real idea what 5 years from now this world will look like. But I know I said it before, but I'll say it again. It's going to be an amazing world, right? And we just have to make sure that we're supporting the right companies going there.
But I believe one thing we can say for sure just now is that Web3 is already changing the way people take ownership of their own creativity and the outputs of that process, as well as the ways for them to monetize that creativity.
Yeah, and like you brought up a really good point about counterfeits, because I know that that has been a really, really big topic, especially with like some of the legacy houses in fashion. But I guess within fashion, have you seen a lot of, I mean, of course, there are brands that are really embracing it, but what are still some of the resistance that some companies are putting up towards embracing, you know, Web3 and the blockchain and all of this?
So I would say resistance mostly comes from some subsectors of a larger Web3 being very volatile. Back in the day, Bitcoin was the volatile asset, was making people rich, was making people poor, but was making a lot of noise and increasing the overall awareness. Recently, more recently, it's been the NFT profile pictures market where people were just speculating on JPEG assets. So hearing about stuff like that makes people more reluctant to maybe explore it as a brand. But this is best solved through education on the space and just trying to understand that there are different aspects of that space with different rates of volatility. Definitely UX and UI is still to some degree of a barrier because the more open the world currently with the technological limitations, the more clunky the UX might be. And finally, you have to meet them where they are and kind of try to overcome that resistance. One point that I wouldn't say is a point of resistance, but the point of challenge is for brands to maintain control of their IP. In the end of the day, in the metaverse, IP is of enormous importance, which also was illustrated by the bull run on the NFT profile pics. In the end of the day, it will be a big challenge for brands to ensure that they can enforce the standards of quality in a way that even with an interoperable asset, that asset will look and meet the standards of aesthetics of a brand rather than become essentially a digital counterfeit.
Yeah, that's really interesting. Ken, Guenther, do you have anything to add in terms of resistance that you've seen from people or companies in terms of adopting this? And how do you kind of overcome that?
Yeah, so I used to work with the Aura Consortium, which is a consortium of luxury brands that has built a tracking and tracing protocol based on blockchain, among other things. And so I really believe in the potential and promise of those technologies. However, at a practical level, I think that there are two complications right now. So one is that I've observed not enough end users care about having independent proof of origin. Most users are very happy trusting a brand that tells them, this is not a blood diamond, this is, organic cotton or whatever it is. And so therefore, it's really hard to invest massively in transforming the supply chains when maybe 5% of the users really care about independent proof about the statements that the brands are making. So we're not yet at a point where the business case is quite there. And practically also the second aspect is, I think when you're dealing with new technology, there's always a risk that whoever is developing a standard or a protocol is trying to capture most of the value. Kind of the Web2 reflex of platforms inserting themselves between brands and their users. And I think whenever startups have tried to build protocols around tracking and tracing or proof of origin, there has been this suspicion that they are doing that to insert themselves between brands and users, and that ultimately they will try to disintermediate the brands or capture part of the value. And that that suspicion has been a legitimate cause for concerns on the part of the brands.
I think that most brands that I know, and by no means know all of them, they're just way too busy doing what they're doing, right? So they were a bit overwhelmed by whatever came at them. So initially it was startups who pushed the idea. And one thing I've been following on the very outskirts of fashion is in the watch industry, right? Which is always very, very open to any kind of means that are against counterfeiting. And they have become quite interested in embracing the technology. Now, the main problem is, again, coming back to what I said before, dominant design. Now, there's many great protocols out there, but nobody knows which one is going to win in the end. So which one you're going to build it on is a big challenge. But many of them are starting. And the interesting thing is there's a firm in Geneva called Genève, and it's the first really Swiss, almost circular, but very, very sustainable watch. And they're kind of moving a little bit all of the Swiss watch industry right now, right? Because everything from the bracelet and so forth to the entire packaging, the way it is delivered and so forth is really well sold up, right? And I think the big guys were a bit shocked by that, but they're trying to embrace it as well. And obviously blockchain and Web3, also Web3 is a bit on the outskirts there, are moving them a little bit. So whatever it may be, I think it's mostly new companies. Some are starting, some of the old ones to think about it, and it will happen in the next 2-3 years.
And Blake, you kind of mentioned UI and UX as being two barriers to entry. Kind of to open or to touch on that again, what are some other barriers to entry in terms of fashion and Web3, and how do you make it more accessible? Ken, do you want to answer?
Yeah, so look, I think that in every industry and technology, products and the user experience need to get better. And so I'm sure many people are going to talk about that. I think at this point in our industry, there's one thing that I'd like to highlight, which is that we're dealing, in Web3, we're again dealing with the storage and transfer of value. We're dealing with people's and companies' money, and in the end, the biggest barrier to mainstream adoption is, especially now, fear of what's going to happen to your assets. So as an industry, given all the scandals that have happened in recent weeks, on the part of centralized actors that position themselves as trustworthy, even though they were not practicing the discipline of transparency that our industry is advocating for. I think at this point, there's going to be a lot of work to be done to reinstate trust in crypto actors and in our industry. And this is going to, again, like I said before, rely on two important pillars. On one hand, decentralized ecosystems that rely on code to establish transparency and security. But those decentralized ecosystem and the self-custody of assets is not for everyone, is not for new users. So therefore, the second very important pillar is going to be to have strong brands that are regulated and have a footprint that you can see in every jurisdiction where they are operating. And the combination of the two, so code for the, like strong brands and regulations for the newcomers, followed by access to self-custody and decentralized protocols when those users become more familiar with Web3, I think are going to be essential to build, to bring the next wave of growth.
Yeah, definitely. Some of the challenges that are specific for the fashion space is how do you productize amazing creativity and aesthetics? How do you make it a scalable tech product combined with the right business model? A secondary challenge, I would say, how can you demonstrate the results of services and products that you deliver to brands in a way that enhances an understanding of you as a partner to create new generate new revenue lines, open up new audiences, and further build out your brand equity rather than just a marketing gimmick based on an NFT flyer?
So then I guess the final question, what's next for everybody and their companies? And added on to that, where do we think all of this is going? Web3, fashion.
Yeah, I mean, again, as for Cronos, we're a blockchain protocol. We focus largely on the infrastructure and the promotion of an ecosystem as opposed to specific use cases. So as for us, right now, what we are focusing on is on building and preparing for the next wave of mainstream adoption. So that means, at the protocol level, we're just investing in scalability and upgrades to the protocol so that we can be one of the cheapest, fastest, and of course, carbon neutral protocols out there. And then in addition to that, because of what I just said, we want to partner with strong regulated brands so that they can become the interface and the funnel for newcomers coming into Web3 before those users are ready for self-custody and decentralized applications. And so our partnership with Crypto.com in particular is the main way that we want to achieve that. And we're continuing to invest very strongly in that partnership.
On our end with Outlier Ventures, we are currently the biggest Web3 accelerator, and we will continue to build out that scale and accelerate projects in the Web3 space. We're not slowing down. It's business and growth as usual. With the Farfetch Dream Assembly Basecamp program, the current cohort has been a huge success, and it will be finalized mid-December, and we're already preparing for the next one, opening up recruitment 30th of January for a program start 17th of April. And your question, like, what is next? Well, Web3 is both technological, but also a cultural movement, allowing for new forms of digital scarcity and ownership. So it's not surprised that the fashion and luxury industry have been the first early movers. And virtual fashion and augmented reality is already part of the culture. And much like with a lot of solutions, or like with using the NFT format or other Web3 components, the goal is to get to the point where most of the users use Web3 components without even realizing it. Digital fashion will start intersecting with traditional fashion and offer a new experience layer, a new way to get out the value from assets and a sense of community to their audiences, which is very in line with Web3 ideals.
As for Exelixis, I'm always trying to be very humble, right? Because we're just one small firm in Zurich, Switzerland. But as it says on my, I believe, LinkedIn profile, I strongly believe, and I know I share that with my co-founding partners, that the future will be decentralized, and we hope it will be circular. And in Zurich, it has been ingrained in the constitution, and in Switzerland, it's in the law, and so we see it gaining momentum. And a new generation and new technologies, such as through Web3, coming up and coming at us, that just creates huge opportunity to really invest in that space. And the one thing I'm hoping for is that there will be more people putting their money behind it, right? Because right now it's very difficult to find co-investors and also to find money, right? Right now this is a family office kind of setup, and as said, the future will be amazing, and we hope that there will be more people sharing it with us.
I do think that, Web 1.0 was really making websites and everything right now. Web 2.0, we saw a big transition of so-called corporations, sharing, linking, connecting, but it was a more centralized structure right now. I think Web 3, in a world where, people are driven by having control over their own data and be able to prove, to be able to prove to place that, that is their data, and be able to own other assets and be able to prove it right now. I think that's definitely a trend right now. And I think that if you can read the trends of saying, hey, digital and physical are linking, there's a need for digital and physical to link together. There is a need for people to connect, not necessarily through a centralized structure, but also through, where they can dictate what they share, what they not share, what they want to share and how they want to share. I think these are trends. These are trends. When you look into those trends, I do think that it still is in the concept of, if you have good content, then people will come. So there's a community, and once there's a community, commerce will happen. Right now. So we look at it as a place where content, community, commerce, but how people interact, is it in a centralized structure, or is it a decentralized structure? And also, can you prove the ownership, or can you, and can you control control what you share? I think these are the biggest trends of what's different from Web 2.0 and 3.0. So I think that if companies and investors can realize that content, community, commerce, this is not going to change, but I think the dynamics of how people interact and how people want to share, I think once you understand from the backlash of so-called, advertise-driven, personal data-driven kind of thing right now, I think that then people can be a little more comfortable and open to seeing the potential of Web3, blockchain, and the metaverse. I definitely, a company has to be sustainable, and sustainable is that it has to generate cash. However, many companies cannot generate cash or cannot be profitable from the start. Then, then I think that the key metrics or KPIs that we use is growth. Now, anybody can achieve growth if you give it out for free, right? Right now. But I do think that are the unit economics very clear that there is a customer acquisition cost, and what is their lifetime value? What are the unit economics are the ones? It doesn't have to be necessarily profitable, but it can't be just like an endless pit of money that you have to keep on pouring down. So definitely when we look at companies right now, we like companies that have some ballpark figure of their user economics, and unit economics and everything right now. Those are the so-called KPIs that we look at. And then of course that, is it really growing, right now? But growing at a reasonably, there is a path to profitability, right now. There is let's say that your user acquisition is $1 million, but your lifetime value is only $500,000, of the customer. Then, you're going to lose $500,000 no matter what. I mean, you have to, so those kind of things that the unit economics that we look very closely at.
Oh my gosh, thank you. I just want to, first, thank you everyone who came to listen to the panel. Thank you to the lovely panelists. Thank you to the summit for giving us this space to talk. I'm excited to see what the future brings. I hope everyone stays safe and healthy, and happy holidays.
Thank you everyone for joining today's conversation, Measure the Metaverse's Value. We're so grateful to Dominic and our speakers, Blake, Guenther, Jimmy, Ken, and Lata for all the insights. We would also like to thank our media partner, Vogue Philippines, and CFS Hub partner, Caring, our retail partner, Gallery Lafayette, and community partners, Amex and Meta. We look forward to keeping this discourse alive throughout the duration of CFS Summit 2022 and throughout the year with CFS programming. You can visit our newly launched CFS page at cfs.fashion for more news, insights, and analysis on investing in the metaverse.